Welcome back, dear traders. Let's discuss recent market developments and catalysts. Wall Street closed with moderate losses on the last day of spring. Market sentiment on Wall Street is cautious during the pre-market on the first day of summer. And this season is loaded with the crucial economic data that could set the market in motion. Stock indexes closed May with minor changes. The Dow Jones closed 0.7% down, the Nasdaq shed 0.4%, and the S&P500 lost 0.6% to close at 4,132 points. This is how the market responded to the hawkish comments by Fed policymaker Christopher Waller and the fresh inflation peaks in the Eurozone. Now, investors are anticipating a series of macroeconomic data and new remarks by Fed officials. Wall Street indexes are trading higher in the pre-market. The S&P 500 is expected to trade in the corridor between 4,080 and 4,210 points. The key indexes traded with a higher volatility in May that was not the worst month. The Nasdaq lost 2% last month. The Dow Jones closed the month almost flat, and the S&P 500 stayed afloat amid a rapid rally of oil prices. Stock of ConocoPhillips, Chevron, Valeria, ExxonMobil and Hess included in the index hit multi-year highs. The energy sector grew 1% on Tuesday and has expanded by more than 60% since early January. The revenues in the energy sector rose 14% for the first quarter and profits swelled 268% for the same period. So the energy sector was the catalyst for the profit expansion in the S&P 500 on year. Investors are stoking fears about protracted high inflation that puts a strain on the stock market. Thus, traders are alert to fresh stats that are due tonight. The ADP payroll processor is likely to report 300,000 jobs in the private sector. Besides, the economic calendar contains the data on construction spending and the ISM PMI for May. President of the Federal Reserve Bank of St. Louis, James Bullard, and his counterpart from New York, John Williams, are due to make their comments on a further monetary policy. Following the hawkish remarks from Powell and Waller, investors will look for clues to a pause in the monetary tightening in the autumn. Another important event is that the Federal Reserve is beginning a large-scale reduction of its balance sheet at the pace of $47.5 billion per month. Thus, the day is full of high-impact events that could influence market quotes. The hawkish Fed and the global inflation nudged the US dollar index 0.2% up to climb above 102 points. Today, the index dipped. Its dynamic will also depend on fresh economic data and remarks by the Fed policymakers. The US currency is poised to extend growth. The intraday corridor for the index is seen between 101.40 and 102.60. Apart from rising yields of US Treasuries and concern over inflation acceleration, the US dollar owes its strength to the outcome of the meeting between Joe Biden and Jerome Powell. The US president said on Tuesday that the central bank is eligible to make decisions and take measures against inflation at its own discretion. Powell also dropped a hint that interest rates would be increased as high as necessary. He considers soaring inflation the main economic challenge to deal with, so it's high on the Fed's agenda during his second term. All in all, the US dollar has strong fundamentals to remain firm in anticipation of the non-farm payrolls for May. The Canadian dollar also has solid support. It's unwilling to give in to its strong counterpart. The USD CAD pay is trading firmly lower at 1.2610, aiming to cross the lower border of the trend channel. The intraday corridor for the pay is defined between 1.2540 and 1.2650. Today, the loonie is ready for crucial events today. In addition to rising oil prices, the Bank of Canada is widely expected to raise the key interest rate by 50 basis points for the second time tonight. The move has been already priced in by the market. Investors are looking forward to the policy statement, and the question is at what pace the regulator is going to raise interest rates afterwards. The market has responded to the third rate hike by 50 basis points in July. Investors are wondering whether the cycle of rate hikes will be put on hold at 3% or the regulator will continue to the levels unseen since 2008. The crypto market has halted its bullish move. Bitcoin grew 3.17% on Tuesday to trade at $31,646. Today, the crypto is gaining ground cautiously. The digital token is creeping towards the target of $32,200. The dynamic is upward, but trading activity is sluggish. Crypto traders are in the wait-and-see mood in the context of the Fed's reduction of its balance sheet. Technical indicators suggest a rally to $35,000, but not today. Until Bitcoin settles above 32,000 and consolidates there, we cannot predict an uptrend. Besides, the crypto might cancel its bullish wave and get trapped inside the range between $28,000 and $30,000. To sum up, traders are alert to a batch of economic data later today and comments from Fed officials. Be ready for high volatility today and trade prudently with the InstaForex. See you online tomorrow.